Hi guys, welcome back to my video. In today's video we're going over the current market situation and the trades that I'm in at the moment. The first trade I'm in at the moment is GBP/USD, and the main structure of the video is really around the DXY, and unfortunately it's sort of hurting my trades. We sort of came on the daily time frame to this sort of key level in the market. If we go to the weekly time frame, you'll be able to see this much better, where we got this weekly level of supply here acting as super strong resistance. And it looks like the DXY has just come up here, and it's sort of like reacted off this high here, or swept it, whatever you want to use, which is really unfortunate for my GU short position, as obviously I'm trying to short to long the USD at the moment. But at the moment it's okay, because I am actually in a short position myself, and my entry was up here. So you know, you can go on my YouTube videos before this, and you can see the entries I took on GU, and when I called them. But yeah, I managed to get this price over here. We got this reaction from the support turning to resistance in the market with a level of supply here, as you can see, and that was my entry really for this trade. And unfortunately it's not going to plan. You know, I have gone break even on the trade, so I am completely risk off, but I would have liked to see, you know, we are now into discounted price, so I'd like to see this sort of retracement now to the further downside, to sort of make up this you know, trend that we've been seeing, this further downtrend. That'll be super clean. Whether we get that or not, I'm not completely sure at the moment. But yeah, it looks like we're struggling with the DXY, moving actually really to a risk off sentiment this week, as we've seen indices. I'm in an indice trade 40, and this has sort of been increasing this week since Monday, where we've seen bullish price action to the upside. Potentially, as we can see with the VIX as well, we've seen the VIX go lower, which is normally a sign. This is normally inverse to how charts indices move. So if we've got the VIX coming down, we should have indices actually going up. So if we look at things like US 30, that's on the rise. The S&P 500 is also on the rise, so you can just see that correlation there, which is quite frustrating. We were seeing things like gold drop, so it's sort of further indicating this sort of risk on sentiment, with more investors investing into indices and taking the money out of safe haven assets, which is, you know, I think that's just very short term noise, to be honest with you, rather than a complete swift of risk sentiment. But it is sort of hurting my trades. The only other trade I'm in is AUD JPY, which is playing out very nicely for me. And as you can just see, he's just printing green candles after green candles. And I put this one in my Discord here. If you go to Be My Trade Ideas, you can see that, you know, I post all my entries, my MT5 here as well, to prove that I'm in these trades. This was the GU position I took. This was the 40 position I took, and you can also see my trade here on AUD JPY, all before I took the entry, which is good to see. So if you want to join the Discord, free link in the description below, and yeah, it will take you through to this, which is completely free. But anyway, back to the video. We can see, yeah, so we're increasing long positions. This is simply just because we just had another rate hike by AUD. This was predicted. There was a high chance, you know, that rates were going to get increased, and there we go, 74% chance of high in the next meeting on 48 days time, and the last meeting we just increased now to 4.10%, which is from 3.85 as well, which was predicted. And you know, high interest rates means investors are more likely to invest into the Australian dollar, and they're going to borrow against the Japanese yen, because if you look at the Japanese yen, on the other hand, we'll see that the interest rates are a lot lower. Bank of Japan, the rates are only 0.75%. So the interest rates mean it's the cost of borrowing money. If you can go to Japan and borrow the yen to buy AUD at just 0.75%, and then sell it at 4%, you're making a profit, right? That's called a carry trade, and the carry trade is 100% in play with all the Japanese yen pairs. The reason we know that is because AUD JPY is going up, NZD JPY has been going up, another interest rate differential. USD JPY is going up, seeing a small retracement from the DXY pulling back. But actually, this is causing worry for investors, because the Japanese yen is getting so weak that we could see the Japanese Bank of Japan intervene here, possibly like the 160 level. We are at sort of recent highs here, which is always worrying. The last time we've come to this levels, we've had interventions in the past. Get to the 160 level or above, 160 to 162, and that's where we see the intervention. So I'm very, very cautious in this area here. I do want to sort of start pulling my Japanese shorts position, so AED, JPY longs, once we get to this area of intervention. But UJ pulling back for me, you can say is a good thing, because it keeps the danger away from this level where they could intervene, and gives me more time for AJ to continue to increase towards my take profit. But for this one, I don't want to really be in this trade for too long. My TP is at the highs here. Hopefully we can get there before it's too late. But break even is nearly about to be in play here. This is a break even. Before I even entered the trade, I knew I was going to go break even at. So yeah, because break even is just at this sort of like level of supply up here, which you can see, which is where I think price may react off before going lower, and I don't really know what's going to happen after that. But that's my reason for the break even there. And then we had a really, really perfect entry again. We have resistance, tones of support, level of demand, and then we broke above the 50 EMA. Perfect trade. Literally nothing wrong. This is an A+ trade for me. So yeah, that was the main things I wanted to cover on the video. VIX is decreasing. That means indices are likely to be increasing in value, which means sentiment is changing from a risk off in safe haven assets such as the USD dollar, gold, and moving into risk on assets like AUD is normally a risk on asset currency pair. We've got risk on our assets, so things like indices. These are all taking an increase here from this risk off bearish sentiment, as you can see, from investors. So this is a great way of using the VIX to determine this. And when we had this short-term up move from the 4th of March to the 9th of March, you'll see, if we go to US 30 here, from the 4th of March to the 9th of March, we had this movement here. So you can just see the impact that these things have on the market. Well, it's really important to be looking at all these things. We can look at bond yields, for example. Why is the US dollar going down? Well, that's simply because if we go to the US 10-year bond yields, we've come to this level here. If we reacted off it, this means when government bonds yields are going down, that means the price of bonds are also going up, right? So this means when bond yields are going down, the USD dollar falls, right? That's what normally happens. When bond yields go up, that means they're normally bond prices going up. So that's how you need to look at that. So if bond yields are going down, that means that there's going to be less interest in people buying government bonds. So that means therefore the dollar will weaken. So that's how you use bonds to do that. And as you can see, USD bonds go down, and that's causing the dollar to fall in value. If we go to AUD is starting to go up here. As you can see, you're starting to go up. So that's also saying that my trade is looking quite nice, and you can see AUD yields have been increasing, right? So this has been helping my AUD long positions because bond yields have been increasing. That means bonds getting more expensive, more people are buying government bonds because yields are increasing for them, right? So that's the idea of bonds, and hopefully that makes sense to people. So yeah, thanks a lot for the video. If you've enjoyed the video, smash the like button, subscribe, and I'll see you in the next one.